Hey, and welcome to my July 2022 update on the best savings accounts and the news and details of things you need to know to make sure that your money is in the best possible place. I've got some details of some higher paying accounts for you, which is fantastic. But let's kick off with some broader news, which is probably not that surprising, but it is a little bit worrying. And it's about how fast our savings are disappearing in the cost of living crisis. So you had a couple of things come out in the last week or so. First of all, the head of Lloyds Bank spoke to the BBC and said that 80% of their current account and savings accounts customers have less than £500 sitting there. That's not much at all. That is not, when we talk about having an emergency buffer, how important that is for when things go wrong. Well, things, in a way, on a little scale, those little costs are all adding up and really biting into our money. Of course, it may well be that, I'm sure this is the case, but many of those customers have their money elsewhere. They've been looking, like I'm sure a lot of you have, for the best possible rate, and that isn't with Lloyds Bank. There are a couple of options there where you might get an okay amount of money if you do this or that, but on the whole, you don't really want to have your savings with Lloyds, you want to have them elsewhere. But still, I think this is indicative. I think it'll be similar everywhere. People, on the whole, have not got much money. And a report from Hargreaves Lansdown that found that in the next year, they think that most people, the amount of money they built up during the pandemic, where they weren't going on holiday, they weren't commuting, that money, they've got spare money, they save it. That actually, the cost of living crisis would have eaten that all up, all would have gone. The reason I'm telling you this is because I'm sure many of you will be in that same situation. And what you might be doing is you might be thinking, oh, I don't want to be going into my savings just so I can buy some petrol, buy some food at the supermarket, all these kind of normal things. Your savings in theory should be for that emergency or for that other big thing you're saving for. And that is absolutely the case, right? But I just want to remind you very quickly here that if you're at the situation where you're like, do I borrow money or do I use my savings? Use your savings. Because even if you're getting, and we'll come on to in a minute, the best rates you can get in some different accounts, even if you're getting the best possible rate on your interest, it's still going to be, the vast majority of the time, a lot less than you're going to get charged when you borrow money. So yeah, there are a few plays made to get 0% interest, things like that, okay? Maybe that even things out. But ultimately here, use your savings. As hard as that might be, obviously combine that with trying to reduce your spending if you're really worried about this, and cutting costs and finding the best deals possible for the things you need. But use those savings first. Then, if an emergency does come along, then borrow for that. But there's no point borrowing and paying charged interest over here and having savings over here earning interest, which is a lot less than interest, okay? So that's why I'm telling you about this. I'm sure a lot of you are worried about this, where your money is going, where it's disappearing. But it's a really important thing. And it goes back as well. If you've got existing debts, use those savings to pay those off, because you will be saving money in the long term. It will cost you less if you do that. So some news on the best current account. So I did a whole video about this last month, so do check that out in detail. But this is from Nationwide. In fact, there are a few things to report on from Nationwide, actually, which are worth checking out. First one is the Nationwide FlexDirect current account. It has bought back a 5% interest rate, which is fantastic. Really good news. There are lots of caveats on that. Again, there's a whole video taking you through that. But broadly, this is only for 1 year, only for 12 months, only on the first £1,500 you have saved in that account, and only the first time you open this account. So if you've had it in the past, you will not be able to, either as an existing or new customer, get this 5% rate. But still, that is hopefully a sign of where things are going. Maybe we'll see some other banks offer increased rates as well to try and compete with that. Because at the moment, the next best step, as we'll talk about in a minute, is still around that 2% rate for kind of easy access, where you can get only a small amount of money, and then 1.5-ish% for full easy access. So this is a big jump up. While with Nationwide, there's two other accounts to tell you about. They've brought back the Start to Save account. This was basically a prize draw / regular saver. It ran until, I think, a couple of years, and it ended in January of this year. They've brought it back, and the rate has increased. Last time it was 1%, which actually wasn't bad at the time. Now it's 2.5%, which it makes it one of the top sort of 5 regular savers out there. However, there are some limits to it. You can only save up to £50 a month, which isn't much at all. And the prize draws take place every 6 months, and you have to add money every single month for 6 months before that draw for it to take place. So I wouldn't say it's an essential one to go for. But if you've got a Nationwide account, maybe give it a go. You're getting a decent amount on there. 2.5% is okay right now. But as we see other regular savers improve, it may well be that isn't a good option. I would obviously update you when that happens. And the final thing around Nationwide is they have hiked the interest rate on their triple access account. So it's not fully easy access. You can take the money out as many times as you want, but if you take it out more than 3 times, the interest rate plummets to an appalling 0.1%. However, if you can have money in the account and it stays in there, you only take out 1, 2, or 3 times in a 12-month period, you get 1.4%. Now, this isn't as good as Chase and Virgin Money that we've spoken about in previous editions of these savings updates. But if you are someone who does want a well-known bank, if you're a little bit cautious of going for one you aren't so sure about, or in the case of Chase, that is app only, if you're not sure about that, you want a brand that you are aware of and then maybe this is a good option for your cash. In terms of, it's only online only though, frustratingly, so you can't go to your branch and open it, so that's still a bit of a frustration, and you're probably better off there going with that Virgin Money linked M Plus Savers account. And actually, while we're talking about Virgin Money, let's go on to the next one. You might remember that I talked to you, probably about February, I think it was, when Virgin Money first kind of really hiked the interest rate on their linked saver, and they did it again more recently. But when they did this in February, they changed the rules, because previously the M Plus current account, which you have to get their linked saver, again, talked about lots in previous videos, I won't go over it all again in this edition. But that one, they took out the loophole, which meant, well, it wasn't even a loophole, they took out the rule where you could have as many of those accounts as you wanted, where you could apply for as many of those accounts. You wouldn't necessarily get them, but you could have potentially, and this was 2.02% on the first grand you have in this account, you could have half a dozen, who knows how many. But they stopped that. You can only have one personal account and one solo account. But over in my Facebook community, well worth joining that if you want to kind of ask me questions or talk to other people like you who are watching this. Short URL is becleverwithyourcash.com/community. That will take you over to the Facebook group to apply to join. Anyway, over there, one of the followers, Craig, he shared that he's just opened up his 30th M Plus current account with Virgin. He's done it. I was like, okay, you shouldn't be able to do that. So I had a quick look. I went in and I applied for my third one because I already had two from before the rule change. I applied for one. Opened it in like 2 or 3 minutes. It's there. So what does that mean? Have they changed the rules or is this a loophole? Well, I'm not sure, because when you actually look at the terms and conditions, it says you're only allowed one personal account and one joint account since that date change. Again, older ones aren't affected. And it says it may close additional ones that you open and return the money to you. So because I've never managed to open this account, doesn't mean I'll be able to keep it. I will put some money in there, see what happens, and update you in a future video. Obviously, if you want to give it a go, but just bear in mind that is a situation. Of course, you might not be accepted for the extra current account, and if you do, the money might be sort of sent back to you. But that's definitely one to consider there. What else to tell you about? A few other sort of little bits. Santander, they're a regular saver. Previously, this was limited to customers who have a 123 current account. Well worth looking at that one anyway, because you get cash back on your bills, but only for people who had that current account. And it paid 2.5%. You could pay saving £200 a month into it. So it was a decent regular saver, not one of the best ones, but a decent one. They've changed the rules now. You can have any Santander current account. So if you've got their sort of standard one, which doesn't charge you anything every 2 months, doesn't give you anything in return, well, you can get that regular saver as well. So again, if you want to save regularly, do have a look at that. Another increase out there this last month or so was with Marcus. Used to be really, really popular one. Lift One used to have this because it was market leading a couple of years ago. Now it's kind of there and thereabouts. Never at the top, probably just, about 10 accounts down or something like that on the Best Buy tables. They recently increased the rate to 1.3% for new and existing customers. However, if you decide to keep your money in Marcus, you haven't moved it to one which is paying more money, you want to keep it in there just because simplicity, whatever, you want to keep it there, you won't automatically get that increase. You have to go into your account and activate it. Now, the update I did on this, on savings last July, a year ago, I showed you, I did a screen grab and I showed you exactly how to do that within your app or online account. So make sure you do that to get that account if you have money in there. Although I would say you might be better off just moving your money elsewhere to get a better rate. There is a deal to tell you about. I'll talk about this quickly because I'm not sure it's actually going to be, many of you are going to be able to get it. This was with RCI. And they launched an offer where you could get a £25 bonus if you opened up a new account with them, whether you were an existing or brand new customer, and put £10,000 into the account. And you had to go via a specific link to open the account, and there's only certain accounts you could open. So I've got details for that over in my kind of update article that goes with this. So you head over to becleverwithyourcash.com for that. But anyway, effectively you did this, but you also had to take a screen grab to show you were stuck in the waiting room for another bank. By another bank, they meant Chase, because Chase had this waiting room which was stretching for 5 weeks potentially for people to open up a new account. So they're saying, look, if you're stuck in a waiting room, open an account with us, we'll give you 25 quid. However, a few days after they launched this offer, Chase said that they stopped the waiting room. So in theory, you won't be able to get this because you need to get a screen grab to prove you're in the waiting room. However, if you are in the waiting room for any kind of savings account, check this out. You might be able to get an extra 25 quid. So let's wrap this up with my top places to put your money in July 2022, the highest paying accounts out there. Bear in mind, of course, that things do change regularly. Head to becleverwithyourcash.com/savings for my updated Best Buy tables, which I look at on a daily basis. I get a lot of comments on the videos come through saying, why haven't you mentioned this bank? Why haven't you mentioned that bank? Well, sometimes it's because it's not one of the top 2 or 3 accounts. And sometimes it's because that rate has come into play after I've done this video. But this is where we are right now at the start of the month, the highest paying places for your accounts. Number 1 is the account we spoke about earlier on for that first £1,500. As long as you haven't had a nationwide FlexDirect account before, get that current account. I would say only get it if you have the full £1,500 to put in, because if you think you're going to get that money later on, or you think you're going to spend some of that money, you're obviously not going to get the full return. This is about money you want to put aside probably, hopefully for a year and not touch it unless there's emergency. But that's the first place. After that, it's the previous Best Buys from previous months I've talked about. First of all, it's that Virgin Money M Plus current account, 2.02% on the first £1,000 you have saved in there. Officially, you can have 1 personal account and 1 solo account, or as we spoke about earlier, you might be able to get more of these. But again, well worth getting that. And next up is the Claro app. This is iOS only, unfortunately. So if you're Android, unlucky, but you can get 2% on £3,000 saved in there. So that's going to be the best rate you're going to get on some money, which is relatively easy access. And spreading that cash around those 2 or 3 different accounts means if something goes wrong, you can get to one over the other. Beyond that, if you've got more than $5,500, that's if you've got Nationwide, Virgin and Claro, or more than $4,000 if you just got Nationwide and Claro, or more than $1,000 if you've just got the Virgin one, then there are a number of kind of full easy access accounts with either no or much larger limits on your money. The linked M Plus saver account that comes with the M Plus current account from Virgin Money, still the top one right now, 1.56%, up to £25,000 in there. That's going to be fine for most people. If you do have more than that though, then you want to look at a different account as well as, I would say, rather than instead of, again, spreading the money around. Chase Bank, 1.5% still, up to £250,000 you can save in there. Plus, it's not a bad account for getting money back on your spending. However, as with all the big banks, it's not going to be particularly ethical. Then you can look at 1.46% with Synergy Bank, up to £1 million in there. 1.4% with that Nationwide triple access account that I mentioned before. If you are looking for an ethical account, again, it's hard to sort of know exactly how ethical this is, but Tandem does claim to be sustainable. That is 1.35% you can get on your easy access there. And if you're looking for a Sharia compliant account, which is kind of semi-ethical, depends what you're going for there, 1.45% right now with Al Rayyan. Now, obviously, there are many other accounts, lots of them doing 1.4% as well that I've not mentioned here. They will be over on becleverwithyourcash.com savings. This is just to give you my pick of the highest paying ones, the ones that I think are the best ones for you. My name is Andy Webb. Thank you so much for watching. Let me know what you think about today's savings news and updates in the comments below, and check out these videos here for more ways to get the most from your savings.